It's going to be an exciting week for dollar, yen, and pound traders as their respective central banks all meet this upcoming week. So is monetary policy going to drive sentiment? I'm Cristina Marujos. Thanks for joining us at XM.com. Looking at the week ahead with me today is our lead investment analyst, Rafi Boyajian. Rafi, starting with the Bank of Japan, it has been speculated that the central bank has intervened earlier this month on 2 occasions to support the yen. Do you think they might announce a rate hike when they meet on Wednesday?
Well, Christina, as you said, the yen did see some intervention, and that triggered a bit of a rally because we had other factors pulling the yen higher after that. So possibly the fact that the yen is no longer under pressure, at least for the time being, that might have lessened the urgency for the Bank of Japan to hike rates immediately. So it's quite uncertain whether or not the BoJ will go ahead with a rate hike. I think the main focus at the July meeting is going to be on the bank's asset purchase program. We were in fact expecting a decision on bond tapering at the June meeting, but they delayed that decision because they did first want to discuss with market participants on the size of any potential bond tapering. So the policymakers, I think, will probably want to focus on that because we are hearing reports that the BoJ might decide to halve its monthly bond purchases from 6 trillion yen to maybe around 3 to 4 trillion yen, possibly over the next few years. Now, of course, Governor Ueda has signaled that a rate hike decision, it does just because they're going to have to make all these decisions on scaling back bond purchases doesn't mean they're not going to be able to raise rates at all. But nevertheless, I think they might want to wait a little bit longer because if we have a look at the economy, it's not doing too great at the moment. And although inflation in Japan is still above 2%. It's not exactly out of control either. So policymakers are rather split on whether or not a rate hike is needed right now or later in the year. But in case they decide not to raise interest rates, that would risk, putting fresh pressure on the Japanese yen because markets are around about 2/3. They're priced in a 10 basis point rate hike. So any disappointment there, would be dangerous for the Japanese currency. At the very least, I think the BoJ, if they do keep rates on hold, they would have to give some strong signals that a rate hike is coming in order to prevent any sharp sell-off.
Now let's cross into the United States. Markets anticipate the first rate cut by the Fed in September. But do you think we'll get any clear signals on that when the Federal Reserve meets on Wednesday?
Well, I think because we've heard already from a lot of Fed officials, including Powell, of course, we've kind of, in terms of what we've picked up from their language, is that they're not ready yet to commit to a September rate cut. But there's a very good chance we might see some tweaks to the language to suggest that we are getting closer to rate cut. And the reason why they're still being so cautious, we had an example of this already this week from the stronger than expected GDP growth in the second quarter, because although we are seeing a bit of a slowdown in the economy and in the labor market specifically, it's all happening very gradually, and because of that they have to move very cautiously because inflation, there's still some persistent upside pressures there, so they do want to make sure that they're in a place where they can be certain inflation will head to their 2% target and stay there. So that's why probably in the July meeting, we're probably going to get a slight pivot, but no commitment to a September rate cut.
Of course, the greenback will be keeping its eye on what comes out of the Fed meeting on Wednesday. It will also take its cues, of course, on the NFP report, which is out on Friday. Could we see any surprises in the employment data?
Well, we have been seeing quite a few surprises from the jobs report in the last few months, but overall it's a very mixed picture on the labor market. It's one of the reasons why the Fed also is making their job rather complicated, and probably because we've got that NFP number print coming up on just a couple of days after the Fed decision. Powell will probably not want to say too much in his press conference in case the jobs report shows otherwise. So the expectation for the July report is a headline payrolls figure of 185,000, slightly lower than previous month, but we're seeing the unemployment rate somewhat higher than it had been over the last year at 4.1%. Wage growth does seem to be moderating, so on the whole, I think things are moving in the right direction, but very slowly. I think for the US dollar, I think what's going to be important is whether or not we see further pickup in the jobless rate, because maybe this might be a more accurate way of looking at what's happening in the labor market, given the month-on-month fluctuations in the headline figure. But I think on the whole, we're probably going to be none the wiser from the jobs report. We're also in a place where where bad news is good news for the market. So if we were to get a softer than expected jobs report, I think that would probably please Wall Street, especially now we're having this sell-off in tech stocks. For the dollar, on the other hand, that would be somewhat negative.
Now, turning to the United Kingdom, with the election now over, could the Bank of England, Rafi, take the plunge and finally deliver a rate cut when it meets on Thursday?
Well, Christina, we could see a rate cut. Of course, we haven't really been getting very clear signals from Bank of England officials. It does appear that they remain split on whether or not to cut in August. We've heard some hawkish remarks, some dovish remarks, and that's why markets are split. I think it's a bit of a toss coin at the moment whether or not we're going to get a 25 basis point rate cut. But I do think that the risks are tilted more towards a cut rather than no change, mainly because, if you read between the lines from what we've been hearing from MPC members, is that even though there are some persistent risks to inflation, inflation has come down enough to basically make a start on easing some of the restrictive policy. We've seen headline inflation, of course, that's been bang on the bank's 2% target in the previous two CPI reports. And although services inflation remains very high and wage growth is coming down very slowly, I think we may see the BoE taking the plunge and starting to cut rates in August. The problem is that it will probably be a hawkish cut, so they're probably not going to want to signal that this is the start of an aggressive easing cycle, or commit to a second rate cut, say, at the next meeting. So I think potentially, even though a cut isn't fully priced in, the pound may not necessarily fall so much if we do get a cut.
And Rafi, before I let you go, we've got the Summer Olympics getting underway in Paris. But what's the latest on the economy on the continent, as we also have some important releases coming up?
Well, that is right. And for the economy, unfortunately, the European elections and then following that, the French elections we did see business confidence take a bit of a hit, not just in France, but across the Euro area. And we're seeing this in the PMI numbers as well. So the latest flash PMIs were rather weak. Now we're going to be getting the GDP growth figures next week. This is, of course, for the whole quarter. The economy was doing a lot better at the start of the second quarter. So we're expecting a reading of 0.3%, which is fairly respectable, but this might not make a huge difference to rate cut expectations. So the focus will be on the flash inflation estimates coming up on Wednesday, and we are expecting the headline figure to ease to 2.3%, which if that is confirmed, that would be good news, of course, for those in favor of a rate cut, and that might put some pressure on the euro as well. But I think the ECB isn't just paying attention to the headline figure. The underlying measures have been a little bit more sticky than the headline figure, and of course, even in the euro area, we have a problem with high services inflation and high wage growth. So I think there's other factors there too that the ECB is going to be keeping a watch on. So again, the July inflation report might not make a September rate cut any more certain.
I see. Rafi, it was great having you with me today. This was The Week Ahead here at exam.com.